ACB stock is starting to look more attractive to me for a couple different reasons. By the way, I have to use code words in this video because otherwise YouTube's algorithm will destroy the video. So when I say things like can or MJ, I think you guys know what I'm referring to. Anyway, Aurora has long been my favorite MJ stock to track, and recently it's been crashing by enormous amounts. As a result, I'm starting to wonder myself if right now might be a good time for me to get some exposure to the MJ market through Aurora, which by the way is one of the largest, if not maybe the largest grower, producer, and seller of MJ related products, depending on how you look at it. So in today's video, we're gonna take a look at the company, their business, the performance, how they're kind of doing in the market right now, where I think the market is headed, and how Aurora will take advantage of the growing opportunities in the future. And we'll also take a look, of course, at the stock and the valuation to see if it makes sense for me to pick up a small position in Aurora at this time, or if maybe I plan on waiting a little bit longer. So we'll answer all of those questions. We'll take a deep dive into the stock. I hope you guys enjoy this. Should be a fun video. Let's go ahead and get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. So let's go ahead and kick things off by taking a look at the stock and seeing how they've been crashing so far, and then we'll transition to their business and their future potential a little bit later in the video. Now, as far as the stock goes, they recently got listed on the New York Stock Exchange last year, but it wasn't really an IPO. Instead, they just converted OTC shares to regular shares. So if you look at their trading history, the stock has actually climbed so far by over 1,000% in the past 5 years, which is obviously great news for anybody that has been holding the stock for that long. However, that's likely not where the majority of retail investors have been buying the stock. More likely is that people bought into the stock as it was soaring at around $10 a share or more, and unfortunately ACB has already crashed from those higher levels, dropping by pretty close to 70% just from their 52-week high alone. That's mostly due to MJ stocks in general growing into an unsustainable bubble that seems to have finally popped in most cases. Still, investors and traders in the bear camp would argue that valuations are still ridiculously high, even at these much lower levels for most MJ stocks in the market. Now, most are not profitable, so a P/E ratio is usually not given. Instead, we can look at PS ratios, which is generally considered a good value at around 1 or less. Yet when you look at some of the most popular MJ stocks out there like Canopy Growth, Tilray, and Aurora, their PS ratios are insanely high. According to Seeking Alpha, at the time of this recording, Canopy had a trailing PS ratio of over 31, Tilray at over 25, and while Aurora was a little lower, it was still trading at over 23 times their trailing revenue. The thing is though that all of these companies tend to experience enormous growth, and that gives them much better looking forward ratios. In fact, Aurora's PS ratio drops all the way down to just around 10 when looking at the following year's revenue, and it drops even more the year after to a PS ratio of less than 6. Again, that is due to high growth as they've already grown their sales from just around 1 million Canadian dollars in 2016 to as much as 266 million in the past year ending in June. That's year-over-year growth of close to 400% in just the past year alone. And that's expected to continue climbing as FactSet estimates that future revenue growth will be at around 165% next year, 69% the year after, and then 91% in 2022. Obviously, that's a little lower than what they just saw the past year, but it's still enormous growth nonetheless that will compound into larger and larger amounts over time, eventually doing billions of dollars in sales. And that's also not considering whether some of their big growth catalysts turn out to be much bigger tailwinds than expected, which is a reasonable thing to think about, as we'll cover in just a second. The main problem, however, continues to be profitability, as Aurora is only in the early stages of their business life, and their free cash flow is expected to continue being negative even through 2021 by hundreds of millions of Canadian dollars. All the meanwhile, their net debt is also expected to climb, reaching over $500 million Canadian dollars as well. But taking a closer look at that balance sheet, it actually doesn't look all that bad, as they do have more current assets than current liabilities, although their long-term debt is a little high, but I think it's probably manageable overall. I would, however, ignore their much larger total assets, as that's mostly filled with goodwill, which is not something that I ever take very seriously. In any case, I think overall, when looking at Aurora, I think we're left with a situation where the company seems to be able to stay afloat and their sales are growing by enormous amounts every year. But because they're still in the early stages of their business, it makes sense that they wouldn't be profitable, at least not yet. However, the valuation is still pretty rich, and even though it has come back down to a more reasonable reality, it still remains pretty high, no pun intended. And that's of course because Wall Street thinks that there is a lot of future potential for the company. So with all of that context in mind, we should now take a look at what their future looks like. So we'll take a look at the market, how much potential there is there, and what are the things that Aurora is doing to take advantage of these opportunities in the future. So let's go ahead and do that now. Okay, well, taking a look at the market, we can see that global can spending is expected to grow from close to $25 billion this year to more than double that amount at over $63 billion by 2024, according to a report from Statista that was updated earlier this year. That's an enormous global market that Aurora can tap into, considering that they're not just a Canadian player, but are really becoming a global market leader in various ways, like through acquisitions and expansion projects. In fact, they've already made 18 acquisitions since 2016. They control 15 global production facilities, and they currently operate in 5 different continents and 25 different countries. The result is that Aurora has become one of the largest MJ growers and producers in the world, with production capacity of around 150,000 kilograms a year right now, which is expected to climb to over 625,000 kilograms over the next year or two once their growing network of facilities reaches their normal capacity. To my knowledge, the only company that comes close to that capacity would probably be Canopy Growth, so that bodes very well for Aurora. And you have to keep in mind too that there's other areas of opportunities out there, like for example hemp-derived CBD, which is widely known for its health benefits without getting the user high, without having too high levels of THC. In fact, it's even legal already here in the United States at the federal level, with only a few exceptions. And of course, the United States is a situation where you have legalization happening in several different states, but at the federal level, can is still mostly illegal, although I do think that that will become legalized over the long term. Anyway, when looking at the CBD market, it's expected to be worth over $5 billion this year, having grown year over year at over 700%, according to the research firm Brightfield. They also estimate that it will grow to almost $24 billion in 2023, so as a compound annual growth rate, that would be over 100% annual growth, which is astronomical for just that specific segment of the market. Meanwhile, Aurora is fully aware of these other opportunities across, beverages and oils and vaping products and gummies and edibles and all kinds of different things, and they're trying to take advantage of them by making strategic acquisitions. In fact, they just recently acquired Hempco Food and Fiber, which is a producer of hemp-based fiber and nutritional supplements, including CBD products. And it doesn't stop there, as Aurora has also acquired or partnered with other CBD-related companies like AgroPro, which is the largest producer and supplier of organic hemp products in Europe, but also Boreal, Radiant, and ICC Labs, just to name a few. In total, Aurora believes that across medical, consumer, and wellness markets, their total addressable market will grow to over $200 billion, which is pretty crazy considering that they're only doing millions in revenue at this time. Of course, bears would argue that all of these acquisitions are essentially being funded through stock dilution, making any investments in the company less valuable every time that they decide to expand, as their total outstanding shares have soared by 116% in 2016, 69% in 2017, and another 116% in 2019, according to Macro Trends. So again, when I think about Aurora, I see this future giant in the MJ space that is very ambitious in wanting to be the industry leader at all costs. And obviously right now those costs are a ballooning share count and a lack of profitability. And that's why I always say that if you're looking at Aurora as an actual investment, then you really should be looking very long term. Now, I'm not an idiot. I know that most people buying Aurora stock are looking for short-term gains. They're really hoping that the stock just takes off in the short term and they make a ton of money. But for me personally, I've never been good at short-term trading or making any kind of short-term predictions. So I have to stick to my long-term investing principles. And from that standpoint, I feel very conflicted about Aurora, because on one hand, the fact that the stock continues to crash and crumble makes me want to jump in, because I'm one of those people who believes in buying long-term stocks when they're actually going down rather than when they're going up, and then waiting for those long-term kind of like growth catalysts to really kick in and then start raking in those profits many years from now. However, Aurora is nowhere near profitable, and so that makes me, from a fundamental perspective, it kind of convinces me to categorize Aurora as more of a spec stock. And when looking at all of the macroeconomic issues that we face right now, all of the headwinds, it makes me not really want to focus too much on spec stocks and rather focus my attention more on proven companies with reliable track records that still have very high growth catalysts for the future. Now, if I was looking for a spec stock at this time, then Aurora would absolutely be at the top of the list, because I see them as a company that has enormous ambitions in a market that will get even bigger and bigger in the future, and there will be enormous potential there. So I do like what I see from Aurora as a spec stock, but you'd have to realize the risk that you're taking, because it is a stock that could absolutely continue to fall by even more. And as of right now, it's really a falling knife at this very moment. But as an actual investment, or as a large piece of my portfolio, that's where I start to see issues, because of their lack of profitability, the rich valuation, and the ballooning share count. And so I really don't want this type of company to have any kind of real influence over my portfolio. So as a large investment, or actual kind of investment in my portfolio, it was a fundamental investment, I'm just not quite there yet. However, maybe I will dip my toes into Aurora at some point, and who knows, maybe I'll even pick up just like a few shares for fun and just hold it really long term. But as of right now, I just don't really see them as a good, solid investment. So I'm just not quite there yet to be buying this stock. But anyway, that's just how I feel. Let me know what you guys think down below, and if there's any MJ stocks that you like to track or are invested in, let me know as well. There are definitely some companies out there that are actually profitable, and there's also ETFs that so there are different ways that you could play the MJ space. But again, Aurora just remains my favorite overall, because of their ambitions and their future potential. So anyway, I remain very bullish on Aurora, but not a stock that I'm really picking up yet. At least not in any kind of meaningful way. But anyway, again, let me know your thoughts down below. Make sure you hit the like button if you enjoyed the video. Thank you so much for watching, and I'll catch you guys in the next one. Take care. Bye-bye.